Was $126,000 really the Bitcoin top? If that was the bull market, it was really underwhelming. Who's to blame? Did AI suck all the air out of the room? Are stocks really to blame? Did meme coins actually do that much? Maybe you need to rethink your entire crypto thesis because the institutions are here and it's going to get a little less exciting.
I was promised a golden bull run, Charlie.
That's a golden calf, and you're worshiping it, Colin. Hey, you've created an idol.
Listen, I was promised a golden bull run. I was promised generational wealth. I was promised a citadel overlooking the new digital surf class.
Exactly. We are going to build a golden citadel over Davos and take over and create a new Davos of just vetted Puritan Bitcoiners, who can look and sit and read the feet of Mises resurrected all day. And
exactly. Yeah. And we're so wealthy that Klaus Schwab is then our communal butler in this fantasy. But instead of that, we are the internet surf class now.
Exactly. Yeah.
Because 92,000 Bitcoin don't look so good on the way down, buddy. Yeah, everyone's happy on the way up, but now we're poor, apparently.
Yeah, it's weird. What was just 365 days ago incredibly high Bitcoin prices is now provincial poverty status. $92,000 per Bitcoin. What does that buy you? Half a banana? I mean, but basically what we want you, listener, to hear is that maybe we need to kind of sit back and review and maybe reconsider some of our understanding about what the Bitcoin and broader crypto market looks like. We have a great Twitter thread from Meltem Demirors who we're going to bounce off of, but there's some interesting takes in there. And I would say, if you are still like a crypto person, what are you doing? This is a Bitcoin market, and it's real. If you're into crypto, pivot to stocks.
Exactly. And here's what I'm going to say to that. We have a mining pod coming out next Tuesday with Kevin O'Leary. He's invested in this Bitcoin miner called BitZero. We talked a little bit about his personal investing philosophy with regards to crypto and Bitcoin. And even he is down on the shitcoins. He said, I've learned I'm not touching that anymore. And the only crypto he has exposure to is Bitcoin and ETH. Now, I know there's some Bitcoin maxis listening to this. God bless you. We love you. Keep listening. Subscribe. We know that Ethereum doesn't fit the purity test. But the fact of the matter is, I think that we have gotten to a point where it's like Ethereum or Bitcoin, Ethereum, and Solana. And like, if you have exposure to anything else outside of that, you have been absolutely rinsed over the last 2 months.
Yeah, actually, let's just pull up this chart. This is a great chart from Meltem where she shows that if you look at the past 5 years of like market cap, traded volume of crypto assets, and you take out Bitcoin and Ethereum, it is very underwhelming. The rest of the market who was not Bitcoin or Ethereum did not have a bull market. Maybe Solana did. But like this chart is, you see a bump in 21 and another bump in latter half of 24. But like, man, things have been very underwhelming. I think this is not as well understood in like the normie or traditional like asset class world, that they're like, oh, crypto, it went up, Bitcoin's at all-time highs. No. Vibes on crypto Twitter have become very PvP. People felt kind of left out by this cycle. Even Ethereum took and played an absolute second fiddle to the other large caps this year. So, this is a good framing here, which is like, are you still that interested in crypto? Because this is pretty clearly a Bitcoin story still 16, almost 17 years later.
I just a few comments on this. I mean, if you look at the start in like March of 2020, I mean, I don't know where that is, but that's like, what do you think? 10 billion? So it's floating around there, 100 billion. Regardless, like you've got at least a 10x to the 1 trillion that it peaked at in 2021.
Yeah.
And you just don't nearly have the same multiple this go around. I think another thing that's important to point out too, this 2020-2021 run-up was so aggressive because this was like the DeFi yield farming craze. Like this the proliferation of Ethereum and Solana based yield farming, applications and stuff just absolutely exploded. And at the time, there was a lot of enthusiasm for DeFi, saying like, see, look, like we can replicate some of the debt structures and some of the capital structures in the traditional markets with decentralized finance tools. Now, of course, as our friend Gwart, podcaster here at Blockspace, pointed out, the incentives don't make the same sense here versus like a VC funded company like Uber. Uber subsidized rides at the start and people liked the product. So they kept using it, and now they still use it even though prices have gone up. The like incentives for yield farming don't work the same way because there's no underlying product that has any value, and you're creating this mercenary class of yield farmers who are just going to move on to the next thing. So that meta died, right? After the last bull market. The meta this bull market was meme coins. And I think that's maybe part of the reason why this coin rally petered out the way that it did, is because it's such a bald-faced grift. Like the meme coin traders knew that you were buying garbage and it's total momentum trade and you're just hoping to get out before the last chair is moved. I think there was still the illusion in DeFi and yield farming that we were doing something here and that there was actually a product that could end up creating value down the road. Meme coins didn't have that. There was no narrative utility at all. But yeah, super interesting chart.
And so I don't want to just punch down on like broader crypto here. I'm going to punch a bit on Bitcoin. Because a lot of Bitcoiners themselves actually feel very underwhelmed. Like if 126K was the top, I don't think it is. Spoiler alert. But but like a lot of people call that the top, and a lot of people call that the top. And so if it was the top, that was very underwhelming. Consider the previous peaks of the previous bull markets. We're talking a 4 to 10x over the previous all-time high. And yet here we are. Previous all-time high in 21 was 69K. 2025 was 126K. That's an increase of like 80 to 90%. That's barely a 2x. And then if you account for inflation, which was the hottest it's been in Bitcoin's lifetime, the new all-time high adjusted for inflation, the previous all-time high adjusted for inflation of 2169K would be $84,000 today, assuming like you buy, big government official inflation publishing.
Yeah, so it's even higher. Yeah, honestly, so like, it's probably where we are right now, if not a little bit more, right?
Yeah, and I don't have this chart here, but there's also there's a Bitcoin priced in gold chart, which is a very interesting one. But the another chart I want to show, again, sorry for the people who are not watching but listening, is Bitcoin annualized returns. So this is another thing. It's like Bitcoiners absolutely, a lot of the Bitcoiners like tie themselves to the mast of Bitcoin's returns beating everybody else. And here we have Willy Woo, a popular analyst, showing Bitcoin's 4-year annualized returns. And right now, December 4th, Bitcoin's been a 12% ROI over 4 years, whereas gold's at 10%, S&P 500's at 10%. So like, has Bitcoin actually been a better investment than the other like common, highly liquid, like, growth investments you could do? So
just to be clear, this is investing over a 4-year period.
Over a 4-year period.
And then, so if you're dollar cost averaging over a 4-year period, this is what your return would be.
Yeah. And it's virtually indistinguishable from the, at least by the ways we look at it. Like there's 1 to 2% difference between Bitcoin, gold, and S&P 500. So, very, I think surprising to a lot of Bitcoiners that they just haven't done that hockey stick up compared to like other asset classes. So that's another one. And then we did a previous podcast on gold kind of losing the basis trade darling to gold this year. Sorry, Bitcoin losing the basis trade to gold this year. And then at some point, I think we might be right on the line right now, but if in 2025, the Bitcoin returns are actually negative. When we're down in the 80s, as we were earlier this week, Bitcoin's returns were negative for the year.
I mean,
So,
Lynn
yeah.
Alden just put out her November research report. Highly recommend people go read it. It's fantastic. But she has a scorecard for major assets. And as of this morning, it was down 2.6% in 12 months.
Okay, let's go through Meltem's thread again more, because we're trying to help you, the listener, build a mental model for like how maybe think of Bitcoin a little bit differently than you used to. Don't listen to the podcasters, just listen to this podcaster.
and this is the white pill chart. We just gave you the black pill on Bitcoin not performing the way people wanted to. And I have a thought on that in a second. But let's talk about this first, because this chart breaks our understanding of how Bitcoin acts in bull markets historically, at least for me, you know, and it goes back to that chart that Meltem
This is the
shared.
Bitcoin dominance chart, which has been rising very consistently since mid or late 2021. So it bottomed out at like 35-40% Bitcoin dominance. So it's Bitcoin in relation to all other crypto assets.
This is market cap of Bitcoin related, as Charlie said, in relation to everything else. And usually in bull markets, this drops because the cryptocurrencies and coins that are in Bitcoin's orbit have a higher beta, and the chance for higher returns is greater because they're less liquid. But as we showed in the prior chart, altcoins haven't done well this cycle. And so Bitcoin's dominance has been eating, like kind of slowly rising throughout this bull market, despite what we've seen in the past with altcoins outperforming because they haven't this time.
Yeah. And so this is, I think Bitcoiners have been watching this. I think this is a chart that most everybody who's dialed into like things happening in crypto is pretty well like tuned into, but it does buck the trend the trend of the 2017 and 2021 cycles, because you would think these other beta assets, these other crypto assets would increase as slop enters the market and there's free money raining from the skies, but yet Bitcoin continues to climb and ascend upwards. Now, well over 50%, more like 57, 58% right now, Bitcoin dominance. And Meltem's take on this is that despite the promise of innovation and the breathless Twitter shilling of endless L1s, Bitcoin dominance is rising, not falling. She says this is a Bitcoin industry, a Bitcoin story, a Bitcoin market, which is kind of funny, Colin, because I will call out Meltem a bit, invite her on the podcast. She's kind of been a crypto coiner shiller for many years. She's always been, Bitcoin centric, but she herself has over the years enjoyed the rising tides of a lot of these cryptocurrencies.
I mean, I think it just goes to show capital allocators in this space skate to where the puck's going, and so it made sense, to ride the shitcoin gravy train.
That was the right play.
Yeah, it was the right play. And, we can talk about ethics of that all we want, but the fact of the matter is, like, most Bitcoin maxis would have probably enhanced their Bitcoin stack if they had just had a little altcoin exposure and have been judicious about trimming it. Now, obviously, that's the problem about this industry is a lot of people ride the top and then just never sell until they're underwater. But I mean, the fact of the matter is we're just seeing a complete shift in what people actually want for these cryptocurrencies. And it's becoming increasingly clear that whatever, at least to me, whatever layer one ends up integrating with traditional finance for tokenized equities, for kind of, higher frequency trading and stuff like that, it's going to look a lot like a permissioned black box blockchain. It's not going to be a decentralized ledger like Ethereum, and it's probably not even going to be something. It might be something more like Solana, but I would imagine that there's going to be even more control right on the back end for these things.
It's funny you mentioned that, because that leads perfectly into the next point, which is the institutions are starting to really generate some revenues from our industry. Like, it used to be the value capture was the dude on sitting on his keyboard who was dialed into the narratives and the solo dev. It still is a lot of those people, but like if we're looking at like where the new like institutional, consistent, stable, I use that as a as a play on words, that where the stable revenue is, TradFi is starting to win. As Meltem says here on this tweet, TradFi greater than DeFi. DeFi is incredible, but TradFi is winning when it comes to actually making money. Stablecoins and ETFs are on track to generate $9.1 billion of fiscal year institutional revenue, whereas DeFi protocols are on track to generate $9 billion of fiscal year 2025 revenue, although much of this hinges on meme coin trading volume. Now, think about that. Right now, if we're talking actual stable institutional revenue, the TradFi is now even with DeFi as as far as aggregate revenues, and TradFi's revenue seems way more sustainable to me than DeFi's, which hinges mostly on meme coins. Now, I actually kind of want to broaden the meme coin term here to be more catch-all, to say it's like fringe assets, emerging assets, geographic arbitrage assets, which are mostly going to be like speculative stuff. But we've seen now these two categories at parity. And if we just look at the trend is up for TradFi. So I wouldn't be surprised if in 26 and 27 we see this continue and TradFi begins to really make some money. I don't know if you have a take on that.
If you could go back just really quickly, I wanted to just point out Maker at the bottom here, and I think Maker is a really good case study for how quickly this industry moves, and also what people actually want to use DeFi for right now. So MakerDAO was a decentralized autonomous organization, is for the Ethereum ecosystem, and it used to have a decentralized stablecoin that was backed by ETH. Eventually, that was really hard to maintain the peg, so they collateralized it with like USDC. But it was one of the first DeFi protocols, and it was a way to, create basically stablecoin capital flows, allow people to take out stablecoins, and issue stablecoins by locking up capital. Anyway, Meltem points out that most of this trading is done through coins, right? And MakerDAO can't compete with that kind of speculation. It used to be one of the more popular DeFi applications. Now it's at the bottom right here. And I think that shows how hard it's going to be for some of these DeFi companies, protocols to compete with the institutions, because the institutions are going to move aggressively, as they already have, into stable coins, into that kind of market. And once those stable coins are concentrated into financial institutions and the liquidity there is much greater than the DeFi applications, there's no reason I would see, unless you were working kind of under, you didn't want to be that out in the open, to use something like MakerDAO. And the rest of those are just speculative use cases like meme coin trading. And so to me, it's like this really shows an existential crisis for some of these DeFi protocols, because like one of the front runners that was actually pretty cool at first is now one of the least used out of all of them. And the others are just used as vehicles for speculation. Whereas there's real dollars moving around now with the institutional, players, and we have the ETFs as well, right? Like as Bitcoin and crypto continues to become institutionalized, like I don't really see a place in the broader scope of crypto liquidity for some of the DeFi protocols, except for fringe use cases.
Yeah, and my heart goes out. I have a real soft spot and enthusiasm for the dream that is the decentralized everything movement. I love the idea, and I love the populist movement of like, we can recreate these trust systems in a less gated way, and have protocols enforced as opposed to human institutions. The problem is that most of the protocols really were actually human institutions all the way down, and that's why Bitcoin is so unique, in that Satoshi, and I think that like the gravity of what Bitcoin really fundamentally shifted is maybe was lost on crypto for a long time, because there was a view that you could just kind of manufacture a like the low trust environment, the trust rules not rulers phenomenon. But I think Bitcoin has continued to demonstrate that it really has a couple. It really did some major unique advances in scalable trust systems, which actually gets to the next point. I was trying to lead into this, which is Meltem says we need to get back to the basics, and this is kind of this does lead into what she's currently doing and what a lot of us, really a lot of the Bitcoin and like a lot of the industry folks see is that proof of work is not just valuable for a decentralized system such as Bitcoin, but really for society as a whole. The Bitcoiners were actually right about this. They just were maybe a little too libertarian coded, and you could say. So she says, we need to get back to basics. You cannot defy the laws of physics. Where do we go from here? Our salvation lies in energy, compute, crypto. Now, Meltem still says crypto. I think she'll eventually capitulate to just saying Bitcoin eventually. But this goes into this thesis that leveraging real world things, and if we want to imagine Bitcoin is a monetary network, this needs to have exogenous factors which bring in scarce resources such as energy. Through compute, we can reestablish and re-anchor the whole system on a better, more sound money, which is Bitcoin. This is a really interesting concept. It's funny because it's almost like you get to see, I'm going to, again, like, needle Meltem a bit here because she's not on the place to defend herself, but like, welcome back, prodigal son. Welcome back to Bitcoin, to where it all began. Proof of work maximalism. We were right. We just weren't cool for a while.
We weren't cool for a while.
We really weren't cool.
In fact, we were making less money than all the people we were saying were bad.
I know.
And now we're making less money than the gold bugs.
Yeah.
And that's worse. That's a lot worse. And sorry, I want to just use that as a transition into a point I wanted to make earlier. Institutional adoption gave Bitcoiners the opposite of what they wanted in a way, because if you actually think about it, we traded in a range of $70,000 to $100,000 for 2 years.
Yeah.
That's crazy. That level of stability above a threshold like that, it only exists in bear markets typically, like where we finally regained 10K before the COVID run up and we've stayed above it, right? I mean, there was the COVID crash, but my point being, it's like you usually don't get those levels maintained in bull markets, right? Ran up to 20K in 2017, immediately shits the bed. We run up to 60K in 2021, we correct that summer, we go back up in Q4, and then we correct through 2022. We had 2 years of basically Bitcoin averaging a price of $100,000. And I don't know, like that kind of stability is pretty insane. And I know people were mad that it didn't go higher, but the fact of the matter is that's kind of a pinch me moment for me, at least, because that indicates a level of liquidity. And with these ETFs, as we talked to Blue Macellari from T Rowe, you kind of create this buyer in their 401k portfolios where they're not going to touch that liquidity for a while. Now, obviously, that doesn't mean that we're going to have 100k as a level. Clearly, like we've broken below that. But my point being is, I think Bitcoiners need to step back, and if they're disappointed, just like appreciate the fact that we had that stability. And that shows that the asset has come a really long way.
It's come a huge way. Bitcoin, we say this a bit like a broken record. The Bitcoin ETF for BlackRock is their best performing ETF of all time. Larry Fink loves Bitcoin now. He was actually literally just this morning, there's a new clip, Thursday morning, where he's like lauding Bitcoin, saying sovereigns are buying. He clearly sees this and he likes it. If Larry Fink likes Bitcoin, that's good for Bitcoin price long term. What does it mean for Bitcoin, the asset itself? Yeah, tune into more Writers Room episodes.
Tune into more Writers Room, or go give Mark Goodwin a follow.
Yeah, Mark Goodwin. Again, there's a lot of people. He's the flag, the banner carrier of this new movement. I wouldn't say it's a new movement. It's just one that finally kind of got validated publicly. I think I want to maybe wrap this up with one of my favorite takes from Meltem. Proof of stake was a mistake. Oh. You love to see it if you're a Bitcoiner. I'm certain there's 365 likes on this, 85 replies to this tweet. So I don't even want to, I'm afraid to read them, but she says Ethereum could have been $1 trillion protocol with its own robust energy and compute system. Instead, MEV extracted billions in values from users and apps. While I think she's right that proof of stake was a mistake, I think she's still kind of missed the point, which is a point that a lot of Bitcoiners talk about. A lot of us proof of work maxis say, which is it's hard for me to imagine there being a long-term multi-chain proof of work regime. Because if you take a energy compute crypto approach as your first principle, it becomes about the most efficient way and profitable way to monetize your energy. And that will inherently compete your Bitcoin chain against your Ethereum chain if Ethereum were a proof of work. So, but I do think she's right, because a proof of stake mainly just that merge in 22, I think just accelerated a trend, which is already the walled garden, the gating of who gets to make money in Ethereum. And so she's right about that. And we,
I don't know.
Okay, what are your views to take?
I don't know if keeping Ethereum proof of work would have necessarily mean it'd be more valuable today. And
I agree with you. I don't agree with her there.
Yeah, I think you kind of hit on one point. The other point is too, it's not just about the proof of work, it's about the lack of centralization for decision making. And before the Ethereum maximalists who are listening, I'm sure there probably aren't very many of you. I'm gonna
anymore.
Yeah. They'll point to when Bitcoin had the hard fork after the inflation bug, as a proof of, central actors changing things. And maybe there's some validity to that. But the fact of the matter is, most Bitcoiners look at Ethereum and they look at the DAO hack, where, a lot of the Ethereum Foundation and anyone using Ethereum at the time lost millions of dollars in this hack, and then they rolled back the chain. And I think that is, or hard forked it. I'm not sure exactly how but they basically scrubbed it, and they rolled back those lost funds.
Yeah,
I think that is the number one problem a lot of Bitcoiners and proof of work maximalists have with Ethereum, and it shows that at the end of the day, Vitalik and the Ethereum Foundation have too much say and control over what happens. And so even if they were a proof of work, it doesn't necessarily solve that centralization risk for a lot of people. And I don't think most people, and I know you probably agree with this, I don't think most crypto investors would look at Ethereum as having equal soundness as Bitcoin because of those things.
Not anymore.
Also, honestly, just because of how it works. Ethereum's account system versus the UTXO model is just crazy. There's a reason why Ethereum had blockchain bloat way before Bitcoin, So
this is a great thread. I'll link it in the show notes. I think we said enough things to anger hardcore Bitcoiners and hardcore crypto people. Please let me know what you think, whether you love, what you hate. And I'll also shout out again, Meltem, come on, I want to talk about this thread, get a 2026 update. So thank you for listening to Blockspace Pod. Make sure to like and subscribe, hit that notification if you're on YouTube, and leave us a review if you're on Spotify or Apple. Catch you later.